Filing your tax return should never be just throwing your income documents together and sending it to the IRS. Yes, your income is a big portion of your tax return, but it also includes information related to credits and deductions, which will help you get a bigger tax refund, not to mention your filing status and other tax information. I'm Mark Steber, Chief Tax Information Officer at Jackson Hewitt. Today we're going to be discussing the biggest tax write-offs available to millions of taxpayers, possibly even you. So let's dive in. My biggest piece of advice: work with a tax professional. There are too many complicated tax rules, laws, and elections, annual changes, rule expirations, and finally the seemingly annual last-minute new rules. And if you misunderstand or overlook a benefit or make a mistake on your tax return, it can be costly. Not only could you receive a smaller tax refund than you're qualified for, but you could run into huge problems with the IRS or state if you make a big enough mistake. So it's really best to work with the tax experts at Jackson Hewitt who understand how the tax code works and will benefit you. Otherwise, you could be throwing money away. And I don't know about you, but this year has been expensive. I could use every dollar I can get. It really does matter who does your taxes. Let's start off with the basics. Who needs to file a tax return? Most U.S. citizens or permanent residents who work in the United States need to file a tax return if they made more than a certain threshold of gross income that year, which depends on your filing status. Last year and year before, that was about 160 million taxpayers. But here's a widely unknown tax secret. Even if you made less than the required to file amount, you should still consider filing a tax return, because you could get money back in a tax refund. This includes you if you had federal income tax withheld from your pay, made estimated tax payments during the year, qualify for a variety of tax credits including the possibility of the very large earned income tax credit or refundable education credits. There are a ton of benefits of filing a tax return. Not only is it the law and the right thing to do, but you can get a tax refund, meaning money in your pocket. And 3 out of 4 taxpayers get a refund each year. You'll avoid interest and penalties if you're required to file. Filing a tax return also protects your credit, can make it easier to apply for different types of financial aid, and builds your Social Security benefits. What do you include on a federal income tax return? Well, tax returns are basically made up of 3 parts: income, deductions, and credits and payments. Your tax return reports your total income, expenses, and other important information, and then adds it all up and calculates your tax liability for the year. Mind you, this is not what you owe or your refund. That is next. Finally, you compare your taxes owed with what you paid and the credits you deserve, and calculate your responsibility to the IRS and state, as well as the refund you might be owed back to you. So what is a tax write-off? Now, what we're really going to discuss and focus on today are the ways to reduce your taxable income and taxes owed, otherwise known as tax deductions. Sometimes people also call them write-offs. Tax deductions provide a benefit by allowing you to deduct a certain amount from your taxable income, depending on the type of deduction and the amount, which means you pay less taxes. Deductions help you in 2 ways. You pay less taxes for each dollar you can deduct, and your deductions might land you in a lower tax bracket, so you pay a smaller percentage, so possibly double benefit from tax deductions. You subtract the amount of the tax deduction from your income, making your taxable income lower. The lower your taxable income, the lower your tax bill. At a high level, the IRS allows you to reduce your taxable income by using the standard or alternatively itemized deductions. But if you're self-employed, have rental property, or gain or loss transactions, there may be many other deductions for you to consider. Deductions really are a big deal, can add up, and are not automatic on your taxes. But for every taxpayer, regardless of other activity, you can either take the standard deduction or itemize. The amount for the standard deduction depends on your filing status. In addition to the standard deduction, there are other deductions you might qualify for on top of that depending on your personal situation. The best part of all, you get to choose and use the method that gives you the most tax benefits. What are some of the biggest tax write-offs for 2023? Tax write-offs and deductions are personal and unique for everyone. There's not a blanket answer on what is the most popular, but I'll share with you some of the most important ones you should know about today, and many people overlook, omit, or just do not take when they can. Education expenses. There are several write-offs you can take advantage of if you're a student, a parent, a guardian, or a teacher. This year, after they were on pause for a long time, student loan payments came back. The good news, there's a student loan deduction that lets you write off up to $2,500 from your taxable income if you paid interest on your student loans. And if you're a school teacher, you probably qualify for the educator expense deduction. You can deduct up to $300 for things you won't be reimbursed for from your employer, like books, supplies for the classroom, computer equipment and software, COVID protective items like hand sanitizer, face masks and disinfectants, and many more. And finally, if you are a student or have a student dependent, there are about a dozen other benefits for higher education, including deductions and tax credits. It's important if you are a student or have a dependent who is to work with a tax pro. Self-employment expenses. Great news if you're either self-employed, full-time, or part-time, even if you have a regular job in addition to working for yourself. You have the most tax deductions and write-offs compared to those who work only for a traditional employer. Basically, anything related to operating your business can be considered a write-off. These expenses you pay as you do your work, or to do your work, or to make money can be tax deductible. This is a huge topic, so I'll briefly touch on a few self-employment write-offs, including the home office deduction. But know that it must be a separate room from the rest of the house that's for business operations only. It can't be a corner of the guest bedroom or using that kitchen table. That being said, if you're self-employed, do not overlook the home office. Self-employed mileage deduction. There are two options to deduct your miles driven for business. You can either claim the standard mileage deduction, which is calculated by multiplying the total business miles you drove by a standard rate, or the actual car business expense deduction, which is the business portion of the total car expenses you incurred during the year, and you deduct it in total. Just know this, if you have a car in your side gig, you may have a huge tax break coming to you. Health savings accounts, or HSA. An HSA is a tax-exempt account used to pay or reimburse qualified medical expenses that generally would be eligible for the medical and dental expense deduction. The amounts contributed to an HSA gain interest tax-free, and the account stays with you even if you change employers or leave the workplace. HSAs are complicated, and the tax guidance is beyond this short video. Just know if you have medical expenses in your future, talk to a tax pro about an HSA. Charitable contributions for tax year 2023. For tax year 2023, only people who itemize and not take the standard deduction can have a donation tax write-off. That being said, if you do itemize, and that typically starts with owning a home, charitable donations can be huge on your tax return for cash, property, mileage driven, and other things you do for charity. And if you're a taxpayer older than 70 or so, it is critically important you talk with a tax pro if you donate to charity, as there are some really special tax breaks maybe there for you. What tax law changes are there for write-offs in 2023? Every year the IRS adjusts the standard deduction and other deductions to account for inflation. There aren't many new tax write-offs or deductions this tax year from law changes, but there are some, including some new green credits and deductions. However, potentially bigger than law changes for this year are life changes. If you've experienced a big life change, it can cause more change to your tax return than most tax law changes. For example, if you had or adopted a new child, you got married or divorced, you bought or sold a home, changed jobs, started a side hustle, and are working for yourself, if you retired or even moved, these can greatly impact your tax return in way more ways than tax law changes. How do you keep track of things that could be related to a tax deduction? Great question. It's so important to keep good records, and best practice to keep records for 7 years in the unlucky event that you're audited by the IRS. Track everything related to your tax return, your job and income, including things like prior year tax returns, receipts, canceled checks, health insurance, and other documents that support any item of income, as well as a deduction or credit on your tax return. I recommend that you organize your tax-related documents into 4 categories: income items, deductions and credits, life changes, and finally other. Organizing this way not only helps you get and stay prepared, but it also helps prompt when you and your tax pro are together and you might qualify for a new or different tax deduction or a write-off. Tell me in the comments, what is your favorite way to keep track of your different tax-related expenses? Is it printing things off and using paper, or using an app? Let me know. If you don't keep good records, especially when it comes to items you want to take a tax deduction on, and the IRS or state asks about it, you could run into issues. Your tax return could take longer to process, it could take longer to get your tax refund, or the IRS might even consider taking further action. It's best to talk with your tax pro to figure out how best to document what you're taking a tax deduction on, or risk issues, penalties, and interest. Going back to other parts of your 2023 tax return, what is considered taxable income? The income section of your tax return includes all wages you earn for the calendar year. This is any money earned from your employers, which will generally come as a statement on a W-2 form. It also includes any money you earned as a self-employed taxpayer, which is generally shown on a 1099 and 1099 NEC form. But income also includes things like unemployment compensation and benefits, tips, self-employment income, as we mentioned, interest and dividends, retirement income, even Social Security benefits might be taxable, investment income, capital gains, crypto gains, gambling income, and more. What is not considered taxable income? Well, this is a critically important section. You need to be careful not to include things as income that are not taxable, because the IRS will not automatically fix it for you. They see your overlooked mistake as free money. So don't let Uncle Sam keep what rightfully is yours. There are many things that are not considered taxable income, like child support, workman's comp, welfare payments, and especially inheritances and gifts. Do not include these on your tax return. You'll pay tax on it, and you shouldn't have to, and you won't get it back. What are tax credits? Well, tax credits are part of your refund. Credits can make your tax refund bigger in 2 ways. First, tax credits give you a dollar-for-dollar reduction in the amount you owe, which can increase your tax refund. And secondly, in some cases, you could get part of your tax credit added to your tax refund, so you get more back. There are dozens of tax credits that you likely qualify for, and I encourage you to watch our other videos for each of them. But some of the most common tax credits this year are the Earned Income Tax Credit, the Child Tax Credit, the Child and Dependent Care Credit, the Lifetime Learning Credit, the Savers Credit, and others. There are so many tax write-offs you might qualify for, but don't make assumptions or guess, or especially rely on a TikTok video or pop-up guidance on your DIY software, let alone your tax pro Uncle Bob friend or that person at work. You might miss something or claim something you shouldn't and get into trouble with the IRS. Schedule an appointment to talk with a Jackson Hewitt tax expert today at jacksonhewitt.com. And if you found this video helpful, please give it a thumbs up. Subscribe to our channel for more valuable information and hit that notification bell to stay updated on all things taxes.